I'm ready to buy a house. Well, I'm super excited for you.
The whole process literally works backwards, where they find a house, they like the house, they found an agent, they go see an agent.
Well, I just went to the open house, or I just gonna go to the open house. And so they start shopping the open houses. They don't even know what is entailing into the process before. And what is the most important?
Don't change jobs, don't make big purchases, do not move the money around.
Boom, you are the winner.
You're sitting to either lose the property or lose your earnest money.
So, you're ready to buy a house? And what now? Hello, my name is Galina Shekhtman. Welcome to my podcast. And today, my guest is Ella Gurfinkel, the mortgage expert for over 30 years. Ella, are you ready?
Oh boy, with that kind of introduction, I'm blushing and I'm not sure if I'll be able to keep up with that.
You're blushing, I see.
That's a first, apparently. But yes, thank you so much for having me, Galina. And almost 30 years, yes. However, in the mortgage industry, we're not allowed to use terms like expert in promoting ourselves. Believe it or not, our compliance and regulations are interesting, to say the least. But I would claim that, yes, I do know quite a bit about the ins and outs of the mortgage biz, although I never claim to know it all because there is no such thing.
We never do. We
Exactly.
always live and learn with the new rules and regulations. Every
Daily.
day, every month, every week. I don't know. No, thanks God, not every minute, but yeah. So before any new rules and regulations, you're kind of an expert to me.
I appreciate that and I love you for it.
Okay, so a lot of times people think, and you would think that the buyers think, okay, I'm ready to buy a house. What now? Well, I just went to the open house, or I just gonna go to the open house. And so they start shopping the open houses. They don't even know what is entailing into the process before and what is the most important. So usually when I have new buyers, I would like to see them in my office. Most of the time, I have lender. Sometimes I have you, if they don't have their own lender. And I go through the full buyer's presentation. Ella, for example, we are in my office virtually or in the office physically. We have a new home buyers and they are saying, Galina, I found you as a realtor. I know nothing about home buying process. What's next? So I introduce them to the home buying process. First one, find an agent. Well, here I am. Secondly, here's the mortgage lender that can explain you the second step, which is one of the most important ones in the purchasing and getting your house and making it yours.
That is absolutely correct, actually. And it's not funny, that so many buyers, instead of coming to the lender first, they actually go to the agent first, or they find a house. And the whole process literally works backwards, where they find a house, they like the house, they found an agent, they go see an agent, and now they want to write an offer, and lo and behold, they may not qualify. And that's really the reason why we're having this conversation, why we want to know what the person, or why we drive, I guess, the buyer, to know what their finances are like. Because chicken or the egg dilemma comes into play.
And what comes? Endless dilemma. What came first, chicken or the egg? I'm like, okay.
So why does a buyer need to have a conversation with the lender? As a matter of fact, ideally, before they start tramping all over the universe, looking at open houses, before looking at homes on Redfin, Zillow, whatever the hell the case may be, Realtor.com, because you don't know realistically what your loan qualifications may be. Yes, you as a buyer may have a certain idea in your head. And I guess
and you created your perfect scenario.
Exactly.
And you live in that bubble that I want this, this, and this, and I can. And you just go shopping. In reality, it could be totally different.
Case in point, as a matter of fact, I had a couple who were moving. They were selling their home in California and moving to Oregon. And they were absolutely hell-bent on me not pulling their credit because they knew they could qualify, okay? They had a huge down payment from the sale of the home in Cali, and they were just absolutely 1,000% positive they would qualify. The income was there, the payments weren't a problem, found the great home in Oregon to move into, but they were hell-bent on me not pulling the credit, and I'll come back to that in a minute. So I couldn't really vet them 100%. So when they found a house, gave me the green light to pull the credit report, that almost put a stop to the whole process. Income qualifying or not, yes, they had the income. Yes, they had the down payment, but they also had recent mortgage rates on the property they were selling in California. Exactly.
Oops. Big oops.
A very...
How many months?
Oops, we did it again.
They were delayed, yeah.
Even a 30-day late in the last immediately preceding 6 months to purchase will completely derail your potential for buying a freaking house. So go, and why do I use this example? Because again, in all other respects, this couple was freaking stellar. They didn't know they had the late. So no surprises is kind of my motto anymore. Circling back to why you need to have a lender conversation before you ever hit the ground house hunting is because you need to know, and most people, to be honest, don't really know what's on their credit. Let's get real. People think they know, but they never actually do because your credit report is simply a series of allegations against you. So starting early, talking to a lender and getting credit looked at way before you start pounding the pavement looking for a home is probably more important than actually talking to an agent.
Totally agree. So let's go back. So you're here. I'm here as an agent. You're here as a lender. We have a buyer. So they found me first, whatever the case is. We all here and together. I explained process barely. I just started explaining process of home buying. Now you. So what questions do you ask the home buyers? And I understand first, yes, like your example, they thought that they qualified, they had income and they had down payment, right? That makes it all, but oopsie doop. So what you can spell out like 1, 2, 3, 4, 5. We can do today, those kind of things to at least pre-qualified, not pre-approved. Okay, they don't want to give credit history today. They don't know you. They just met me. So they just met us. Maybe the
trust is not established yet.
Exactly, that's what I almost said. They don't have trust in us as of yet. So 5 questions that you would ask them.
Oh, wow.
like right now, what we have a buyers. Ready, willing, we don't know if they're able.
Ready, willing, able, question mark.
Able. Ella?
So the questions I would ask is, when was the last time they actually looked at their credit? Are they on looking at credit scores on Credit Karma, on their credit apps? Like a lot of the credit cards now give you the ability to look at your credit score. Again, much larger topic, and I've spoken to that topic extensively in my own videos. But at least give me a semblance of what your credit is like. What do you know about your credit? Talk to me about that. Talk to me about your income. Do we have income, and what kind of income? And I'm not asking necessarily for specific numbers. I'm trying to fill out the situation because, again, trust is not quite there yet and not built yet. So I'm trying to figure out in what direction we're going here. Are you employed or are you self-employed? If you're self-employed, how long have you been self-employed? Because that will drive the loan in a variety of different directions. Are you employed? If you're employed, are you full-time? Are you part-time? Does your income vary, or are you salaried? Are you getting bonuses, commissions, what have you? Because tips,
are
anything.
You 2 years in one position or in one field? I mean,
exactly.
I was wrong asking for 5 questions. So one question could be 5, 10 questions underneath.
Correct. But it's basically filling out the bigger picture, I guess. I look at it as puzzle pieces. So I'm asking you for puzzle pieces so I can put the puzzle together. So instead of me groping in the dark trying to move the puzzle pieces, I'm trying to shed the light on what the puzzle is going to look like at the end of the day. So income-wise, again, depending on what your answers are, we may be looking at different solutions, different propositions, different proposals, different. Income and credit are probably the 2 biggest ones because without the income and without the credit, honestly, we may not even have anything to talk about. Now, down payment to me.
Goodbye, buyers.
Bye-bye. Sorry, not trying to be callous, but really, because credit, yes, we can fix. Income, sometimes, but not all of the time. There's plenty of instances, and you and I have been in that a few times, where the buyers come to us and they're so freaking eager and willing, and they're self-employed, and we get their taxes, and it's like, oh God, kill me now, please. So being willing is one thing, being able is a whole other. And when you're self-employed, it usually takes at least 2 years of good tax returns if you don't have a 5-year history of self-employment. So there's so many caveats that there's like no one big rule for everybody. But the last piece, the down payment, I focus on the least because, I mean, down payment is important. Let's, before I get a lot of hate comments on your channel, not just mine, down payment is something that can be cured. There are ways to come up with down payment. We can, again, deep dive into those, or I can gloss over them.
And that's one more question. Where can you dig for your down payment?
Exactly.
What do you have in your pocket?
Or are we talking down payment assistance? But again, there are ways around that
or
one.
Any particular special programs that exist as of right now, could not have been a month ago or 2 months ago, or definitely not a year ago. But what do we have on the table? What are you qualified for?
Per location. Some are statewide, some are national, some are county specific,
like
some
teachers,
are city specific.
Exactly.
It could be anything and everything. So down payment, I tend to, I guess, not gloss over, but it's honestly the least of my concerns because, again, without the credit and the income, I can't glue the puzzle together. So those really are my first filler questions. What am I looking at? And then from there, we start talking about the dreams and goals.
The buyers are here. You've explained briefly you didn't pull any of their credit reports. They have not provided you with any links to any information. So we are kind of still establishing, the trust in them. And I am trying to explain them what will happen next after lender will give them the pre-approval letter. Well, let's go to the next step.
Hold up. But wait, there is more.
I know, there's much more into it. I know.
There is more. There is one other piece that you and I talk to our buyers about, and that's where the dreams and goals comes into play. That's that's part of filling each other out, basically.
That's what I'm hitting. That's what I'm going towards.
What is their target payment?
For you, as a lender.
As a lender, but it's also circle back to you as an agent. Because if somebody says their payment is $2,500 a month in the San Diego area, that's basically the end of the conversation right there.
Yep.
That's where I was going.
Their comfort zone is $2,500 a month. Well, depending. If they are
not a hard stop. Potentially a hard stop.
But depending on the buyers, yes, it is. It's like pushing the brakes.
Yep.
And asking more questions.
and asking more questions. But that's, again, part of that let's get real conversation and part of the process.
So when Ella at least a little explains the process, and we kind of know the ballpark of the purchase price, hypothetically $1 million, just to be, clear with the numbers, I am going back to those buyers and I say, okay, now then us a little more. And let me tell you, it's about an hour conversation, at least prior to the next step. And then I'm like, okay, if it's a husband and wife or partners, I'm saying now I would want to see your dreams and wishes. That's where I was going to. And I would say that you're as a husband or a partner and I'm giving you 2 blank pieces of paper. Write down 10 musts and 10 wants, or wants and wishes. You can call it whichever way you want. And guess what? Those 2 lists between the husband and wife or the partners going to be absolutely different. Correct. So they will not have, like one would say the backyard and the other would say, I hate planting flowers, or one would say pool. And I'm like, I will never clean the pool and it's too expensive to maintain. So, and then we kind of mix and marry them together and figuring out again, illuminating what they maybe want in their house, but it's not a necessity to them. And from that point, we're going again to the next step. Hypothetically, $1 million is our number. Ella, as a trusted lender, starts working on the loan. Buyers, thanks God, clicking the link that you sent and uploading, I would hope 70% of the documents, 90, because it's never 100%.
It's never 100%.
Never, ever, never. And more ever. I don't know why some buyers hold up to some of the paperwork. That's another puzzle to me.
You and me both, for that matter. It's like help me, help you situation.
I don't know how to explain to them that it's in their better interest to provide all the information up front, because if we are going back to me, I tell my clients, I don't want you pre-qualified. To me, it means nothing. Right here, right now, this table, I can at least show you what kind of house that you can afford, how it's going to look, plus minus. Pre-approved is good. I want my clients to be underwritten. And this is the next step. And Ella, you're going to explain what means underwritten. To me, I can write the better and more winning offer, because underwritten most, equalizes like closing in 2 weeks. Well, we can close 3, 4 weeks, months, whatever. We don't know the cases. We don't know what the sellers want. Every situation is totally different. But to me, if I want to write the winning offers, one of the terms that I'm going to put if I have the loan underwritten, it's like, boosts you up maybe for, I don't know, position 100 to position 3. I don't know. Again, every case is totally different. Every scenario is totally different. We don't know. But at least it gives me an ability, and I will know that my offer is somewhere top 5, for example. So what is the difference between pre-qualifying, pre-approving, and being underwritten?
My favorite subject.
Pre-qualifying, I understand. We just kind of briefly here and there,
no documents. We're just talking.
Kind of shoulda, woulda, coulda, whatever. Yep. Now, pre-approval versus underwriting.
This is where a lot of people will roll their eyes or will just simply go deer in the headlights at me. But a pre-approval is somebody like myself, and you want to hope that somebody you're talking to as a lender has enough wherewithal, experience, guideline knowledge, and the like to actually issue a quality pre-approval. So pre-approval is you, the buyer, providing your financials to me, the loan officer, me pulling your credit, soft, hard, again, separate convo, but you providing the documents, me pulling the credit report, plugging everything into the loan origination software, and running your stuff through the automated underwriting system, if the loan is subject to one of those automated underwriting system programs. If I get a positive response from the automated system, hooray, we're golden, you're pre-approved, go shop. But that's my process. And that's how the process, in my opinion, should be done on a loan officer pre-approval, because we'll look at your financials. We figure out your income off the financials you provided. We look at your basically everything that goes into that automated system. All the dodge, you go, garbage in, garbage out. So we put in the fake information in, we get a fake pre-approval, essentially. That's the simple terminology, back to anybody who's wondering what the hell am I blithering on about. So we want to vet your financial as much as possible before that automated system approval is issued. That, my friends, is the loan officer pre-approval. That's basically, like I said, it depends on the quality of the person behind the desk. The more they know, the more they can spot the underwater reefs. Think Titanic, tip of the iceberg versus the big iceberg, whatever analogy you want to think. Now, the underwriting pre-approval is when we take it to the next level. And there are actually two ways.
Can I interrupt you?
Yes.
For 1 second. Why is it important to you? I just want to, I don't know, how can I say that? It's in your best interest, because if you're going to go to the step when you're going to be in escrow, hypothetically, we want the offer. I'll explain the terms and everything else a little later. We're in escrow. The pre-approval was given and everything was fine. And now we are going to the underwriting process. What could happen?
The file could blow up. And that's actually where you and I had a lovely... That's why I did not say that. I wanted to ask you in the beginning, should we
talk about that case? I mean,
We can. I mean,
Okay.
we're, no names.
oh, of course not.
We never bring up names, but real deal.
Real people, real deal.
people, real deal that literally blew the hell up in everybody's face. You were into it for what, about a week, roughly?
More.
Maybe
A
more?
little more. Doesn't matter.
Doesn't matter.
Regardless.
You
Let's
are in
not go
con-
in
yeah,
the
you were-
details, but
you are
let's
in
just
contract,
picture the big picture.
which
But
means that you have a finite closing date and your earnest money is on the line because that pre-approval letter went in with the contract. The contract has contingency dates. And if you don't have a lender approval by a certain date, you're stating to either lose the property or lose your earnest money, which is in the thousands.
Well, yeah, in that case, it was a big.
It was a
big
chunk of money. I mean, typically we're talking thousands. Sometimes we're talking, depending on the property
Ten
price,
thousands. Yeah.
tens of thousands.
Everything depends. Yeah.
So that's what happens when garbage pre-approval is issued, and then the buyer is left scrambling mid-flight
No, and
in
then
a deal.
and then you keep uploading like one by one, like you're cutting the cat's tail, by the little pieces. Why?
Okay.
I never understand.
Me being visual, that was awful.
Well, that's a thing. Chopping off the cat's tail by little pieces, by inches, whatever.
I'm gonna
the
go
case is.
cry.
Okay, let's
Poor
go.
cat.
Not cry. Poor cat. I understand, but
Well,
If
in that
you
case,
look at
I'm
it,
the poor
that's what
cat. As a loan officer, I am the poor cat in the situation because
yeah,
you're
and
piecemealing me.
and you're dragging the documents like you needed that, not them.
Exactly. It's, again, help me, help you. So why is it important to have a solid pre-approval? So that your deal doesn't blow up after you go into escrow, after you are in contract, and you're not putting your earnest money at risk
Online.
or earnest money on the line and potentially losing the property that you fell in love with. That's basically the bottom
on
line.
the top of that, so let me back it up just a bit. You're pre-approved. You know how much you want. You know your wants and wishes. We kind of fine with that. Things good. Next step. We are going to preview homes. Hypothetically, you fell in love with one of the houses. And again, let's just use $1 million. We are going back. I'm starting writing a purchase agreement. Before that, I call the agent. I ask them, what are the seller's needs? Do they need to stay after closing? What are they wishing for? Do they need a quick closing? Do they need a longer closing? Anything in particular I need to know, which escrow and title they have in mind? What are the time frame? It's like so many components before the offer is written. Okay, we are writing an offer and I'm explaining that, okay, the price is not just everything. There's so many different terms, like what, first of all, figuring out from the seller's agent about the sellers, their needs and their financial situation. Do they are looking more for the cash offers, or will they will accept regular offers with whatever the cases are, doesn't matter, down payment. And then we have, like you said, we have some contingencies, and those are inspections, appraisals. I can talk about inspections like for months probably, so many of them. First of all, of course, main and general inspection. If they see or find out something that is suspicious or it looks suspicious or some leaks, they can refer you to the remediation company, or if something wrong with the roof, the roofers, or if something wrong with the plumbing, that you can, do the sewer, you put the cameras, the inspector. So to the sewer inspector, and like so many like chimneys, it's so many. So it's up to you as a buyer to perform as many inspections as you would like to have the full picture of what the house look like.
But wait, the inspections come with a price tag.
That's what I'm saying. That's why I started telling. So all those inspections cost a lot of money. On the top of that, the contingency period, it's 10, 17 days, lender doing an appraisal. So any of the inspections and appraisal, at least a couple $1,000s, regardless of the price point of the property.
Exactly.
If, again, something goes wrong before the contingency removing period, which is, again, 10 to 17 days, not only you're losing your security deposit or good faith deposit,
earnest money,
we can name it whatever you call it. It's a chunk of money, okay? It's like
a chunk of money.
It's a sack of money. It's a suitcase of money, whatever. On the top of that, you losing the money that you spend on all the inspections, because inspections should have been done like first 5-7 days. and appraisal. So you're losing all of that. Therefore, I strongly suggest to be not only pre-approved, but go an extra step. It's for your own good. You're going to say thank you to me and Ella later because it's going to make your escrow process much easier because you're going to have so much going on. Oh boy, you're going to have all the disclosures from the seller. You're going to have the title report from the title company. You're going to have the escrow documents. You will have to go through all of that paperwork. I can tell it's probably, I don't know, maybe like this. Nobody prints them any longer. But you will have to go through so many different things. On the top of that, it's like, an axe over your neck. You're going to have to upload more and more documents to get underwritten. And now, yes, we're going back. That's what could happen during the escrow process.
That's what cooked that file, to be honest.
That's what cooked that file.
But on a serious note, what is underwriting? So yes, I am your first line of defense when it comes to the LO pre-approval. Underwriter is another, so I am licensed. And my license number, by the way, gets printed on all of the loan documents from the start to the very end, and the feds track us. So Big Brother is watching. Underwriter also holds a license. And if a large percentage of their loans that they approved, signed off on, gets into a default situation, they may lose that license, therefore they may lose their livelihood. So nobody's in the business of just willy-nilly just putting their signature to it electronically or otherwise.
They like looking not through the magnifying glass. They have this big of the magnifying glass.
It's a microscope. It's a Hubble. It's a freaking Hubble.
I'm like, okay, it's a microscope. I mean, what is it? 'Cause that's on the moon. When you look at
Hubble.
The Hubble. That's what they look
Telescope.
At. The telescope. That I was looking for that word. Yeah.
There we go.
So it's not only that. Yeah.
So the underwriter will actually, all of the documents that I've collected from you up front, and that's why I ask for certain stuff up front. And by the way, my personal view is I'll ask the bare minimum up front to get you pre-approved so that we can actually get you out shopping if you're clean as a whistle. If your financials are clean as a whistle, I will send you shopping with the bare minimum of documents. I will issue the pre-approval and I'll be very much certain that I can't guarantee that will close, but I will be very much certain that will close. Now, underwriting approval, like I said, will actually look at everything under the microscope. Among other things, let me give you an example. I have a client right now where we've already gone through underwriting, about 2 rounds of it. And now with an additional bank statement submitted, we have that we needed to show the current balances and certain transactions to take place. Now, on the bank statement, the underwriter notices a recurring monthly payment to an XYZ company that is not reflected on the credit report. That is referred to as undisclosed debt. Undisclosed debt means we may have a debt-to-income ratio issue, meaning you can't quite qualify for that much money that you applied for. So things like that is something that we all have to look for in my industry, including the underwriters. So sending the file into underwriting, sending your pre-approval documents for underwriting means that the next level of authority with a license reviews everything. And now they have signed off on you going to shop with a much higher degree of certainty that your loan will close. And guess what? That underwriting process takes usually a few days. It's setting up the file for underwriting.
For the close. Hypothetically, if we are in escrow and it goes into the and it goes to the underwriter, that means that there are like few terms, like maybe a few like latest paychecks or the bank statements, and the file will be closed.
Yep.
So we are ready to close. So that process, when it goes to the underwriting while we in escrow, meaning lender already looked through it, and yes, and everything is like almost in the perfect condition, 99, 98%. We just need a few little pieces, simple latest pieces of paper.
Exactly.
Statements.
So the underwriter reviews, we have an underwriting approval, 2 birds, 1 stone. Stone number 1. Everything has been reviewed. We can now close in 10 days or so. That's usually a win because that sets you apart from everybody else competing for that same house that you may want.
You will be able to, this, if you're going to go, farther, you're going to go in being underwritten, it equalizes you with the cash offer.
But wait, there is more on that one.
Right.
We'll come back to that.
Yes. So if you underwritten buyer come up with your offer and your terms are better than the offer that was given in cash, maybe they were, debating the price or negotiating the price, or the terms were not as favorable as we wrote on the purchase agreement, boom, you are the winner.
Or if you're comparing apples to apples, two offers, one's been through underwriting and the other one hasn't, and they're similar enough, the underwritten one will always win over the one that hasn't.
Well, you tell me why.
Exactly.
Because they already underwritten, and nobody knows what's going to happen with that file when they're going to go to the underwriting process.
There we go.
What else is going to be found out?
So we kind of inadvertently already talked to the bird number 2, and that's setting you apart from the competition. So really, like I said, 2 birds, 1 stone. You already have been vetted, and you can close fast, and you already have been vetted. Therefore, you're heads above the competition. Now, there are actually 2 different ways that somebody can be pre-approved. And Galina and I have talked about it multiple times, and we've actually done the cash guarantee before as well. Yes. And there is a simple or a basic underwriting pre-approval
with cash guarantee,
which is what I've been just talking about, where financials get reviewed. There is still some stuff that needs to be updated, pay stubs, bank statements, because those get outdated.
Always, yeah, because those get outdated.
Yeah, home has to be appraised, title report has to be issued and cleared. Basically, mostly property-related stuff, not so much the buyer-related financials. But there is a next level. And as far as I know, not everybody offers this option. I know Fairway does. I know Fairway's where I work. I know there's a handful of other big lenders nationwide that also offer the cash guarantee, which means that not only has somebody gone through underwriting, but everything that has to do with income and assets, meaning income and money, and of course credit, has been signed off. The only thing that you as a buyer have to do is go out there, find a home that will pass the appraisal, pass the title, and we need, of course, the sale agreement, and we're ready to close. Again, here we actually have not 2, but 3 birds, 1 stone. We have speed to close. We have already been vetted. And 3 is the cash guarantee, where Fairway, in my case, my legal department issues an addendum to the sale agreement that Galina will attach to your offer that basically says that we, as a company, guarantee that we will close on this loan. And if we can't, we'll pay the seller $10,000 as a penalty. Or, better yet, Fairway will purchase the house. So basically, the seller has we're removing all risk for the seller if they chose to accept our offer.
Ella, do you know what we haven't covered yet?
What
not to do when you start buying the house, or you're pre-approved. Okay, now let's buy the furniture. Oh, you know what? I just want a new car or something else. Okay, so from the beginning, yes, right. At the first mutual appointment, I will always keep saying, and you probably will do, we did not cover that, but it's very important thing because otherwise nothing else will come. Nothing else will be in place till you guys stop buying stuff. Anything.
Fill in the blanks. Change jobs.
Change jobs.
Quit a job.
Don't buy a boat or a plane. I don't know. Whatever, whatever you can imagine in your wildest dreams. Don't shop. Produce, coffee, okay, and water.
Well, we don't want them to die of starvation, do we?
I said produce. They can eat.
They can maybe.
Not very high-end restaurants. Yeah. But I'm joking. Okay, I'm over-exaggerating.
On a serious note, the big don'ts. Don't change jobs. Don't make big purchases. Do not move the money around before we tell you can.
Between the accounts. Even if you have 15 accounts, keep them as they are. Otherwise, you're going to have so many questions.
Otherwise, I'm going to be out for blood.
Right.
And I know where you live. So that's scary.
And sometimes. You know the Social Security, which I don't.
I mean, granted, it's an empty thread, but realistically, you will make me very mad if you do any of the above, because that's how the deals blow up. Been there, done that, burned the t-shirt.
So
I've
I'm
had
not going to say how many times.
exactly, like literally burned the freaking t-shirt over and over again. Got scars to show. I mean, seriously,
Okay.
some of the t-shirts were burned while I was wearing them.
Okay, we've done with all of that. They're very nice buyers. They listened to all of our advices. The appraisal was done. The contingencies are removed. Everybody's chilling. What's next? So we removed all the contingencies. Loan docs are drawn. How many days till we close? That's actually, that question comes up.
Okay, so one of the, I guess I'll start with the biggest pet peeve in a way.
Yeah.
And that goes right alongside with piecemealing us the documents when we ask for documents. Also, not checking your emails while you're in the transaction, because everything we do is in writing. In case you haven't noticed, everything we do
Wow.
is
Not
in writing.
like 25 years ago, on the car roof.
Yep. On the side of the road, everything is in writing, and I'll keep saying it till I'm blue in the face. Because everything we have to send you, the request for your documents, the documents for your e-signatures, the disclosures for your e-signatures, and frankly, there is a series of disclosures throughout the transaction that go out that if you don't sign one, incorrect, inaccurate, in whatever, it still has to frickin' be signed. Okay? I can't stress that enough. Because the next one will correct it, and then the next one, and then possibly the next one. So just because something is a little off on the numbers or a little off on the documents, it doesn't mean you can like sweep it under the rug, because until that first one gets signed, we can't send the next one, and so on and so forth. And towards the end of the deal, there is a form that's called a closing disclosure, a CD. No, it's not a disc with music or a movie.
Oh, really?
Damn.
Wow.
Exactly. It's a closing disclosure CD, which if you don't sign the damn thing, you're delaying your closing every day you don't sign it. That dang thing has to be done 3 days prior to closing. Otherwise, we can't send the loan documents for you to sign.
Sorry, there is a loan rate lock. If you're exceeding the certain days, you're not signing those loan documents. You're
not providing. Or not providing your
that's
documents.
Another issue that I haven't even thought about
That
till
is
like
actually a
a
great
minute
one.
ago.
So let me finish my thought, and I will talk about that one, because again, there is that word, because. So when we send you stuff by email, there is only so much of us, meaning lenders, to be spread so thin as to send the emails and then also to play babysitter and
Almost
send you
babysitting you.
and send you reminders through text to check your email. Yes, it's a pet peeve. And yes, I get it. You have a job, you have a family, you have a life. But
So
guess
do
what?
we.
So do we. We have a job of getting you to the closing table. So your job while you are in contract is to check your emails and respond to emails and sign
Promptly.
documents.
Actually, it is the buyer's job
Responsibility.
and responsibility while they
Contractually.
contract. Well, it's not written in the
In
contract.
some states it is.
No. Anyway, to at least acknowledge receiving those emails or text messages from agents or lender, and I'm not saying do it like ASAP, but
Reasonably, same day.
Reasonable, amount of time. The same day, at the evening, everybody's go home, or if you're working nights, that's in the morning. Doesn't matter. Acknowledge receiving information from your providers.
I mean, if let me.
We are on your team. We are here for you.
We are on your side. Don't take us wrong, but. How would you feel if you found a perfect house, emailed Galina or texted Galina about the house, she got so busy that she didn't see it, and therefore that house got snapped by somebody else? Wouldn't you be mad at her?
Shoot me.
Exactly. Same here. If you are missing our emails with the documents that need to be signed,
important documents.
Exactly. They're not just there for the hell of it. Then you are jeopardizing your own transaction. And
exactly.
Going back to the question you were asking about the rate lock. So what happens
That's
when you go into contract?
One
more thing.
I don't know, term, whatever you call it. One more. It's not a part of the contingencies, but
it's part of the loan process. So we typically can lock your rate in as soon as you went into contract. Meaning we can, as a lender, by locking the rate, we're guaranteeing that you have and will have the interest rate that you agreed upon, basically for your loan, for the rest of your life or the rest of the life of the loan.
The life of the loan.
But that rate lock is only good for a specific number of days. It can be 15 days. It can be 30
depending
days.
on the loan that you're obtaining.
Exactly. 45 days and so on. So let's say the typical rate lock term is 30 days, typical. If you blow past that 30-day mark,
by not opening or answering your emails and not providing the documents.
correct. Let's say it's your fault. Yes, we're going to be out for blood because first of all, we try to match the lock term, the 30 days, to the length of your purchase contract, which is also usually typically 30 days. I'm not even talking about you jeopardizing your closing date per contract. I'm talking about that rate lock. We as a lender guarantee you get that rate. Guess what happens when we don't close on time in the length of that lock? There is additional fees to pay. So your cost of the loan just went up and it's your fault.
And also, if you delay that for too long, you can start the process pretty much almost all over again. Sometimes.
And some sellers are not so forgiving for you delaying the closing.
And if they are, okay, now imagine you delayed and the closing is not, for example, the 1st of the month, rather the 15th of the month. But the sellers already arranged the moving to another place. So it's not like one person deal or one family deal.
Sometimes it's a domino effect and there's multiple homes on the line.
Sometimes that's, I almost said that sometimes. So it is, okay, as it is, it's 2 families or 2 households are on the map. But it could have been, like you said, a chain effect or a domino effect.
Yep.
So you're jeopardizing not only your transaction, sometimes if seller is desperate and they had the backup offer that is cash, 15 days closing, they can say you didn't perform, goodbye, we are closing. You're losing earnest money deposit. You losing all everything that you invested.
It is an investment.
I hate saying the word wasting. You are investing in your inspection. You are investing in your appraisal because it's your house and you're entitled to know what is going on with it to the less detail, to the last piece of blood, like you're saying, right? So you're jeopardizing not only your transaction, you're jeopardizing literally the domino effect.
So, when somebody wants to buy a house, it's not just the agent that you need to talk to, but it's a lender. And it's chicken or the egg. We're both equally as important. Right. There is no one without the other. It's always a team effort. We're not ganging up on you. That is not the goal. That is totally not the goal. We just want, and yes, we're passionate about making people understand that while it's our livelihood, but you're putting your money at risk and we want to help you.
Your life, your future house. I mean, maybe your kids. I don't know, maybe your pets. So you're putting your life on the map by not providing. And I wanted to say one more thing, but I already forgot, of course. If it's come back, I'll come back to it. So what I want to say that buying a house is not just go and shop at the open houses. Right before that, and I'll provide you a list. Again, I'm going to go to the beginning. I'm ready to buy a house. Well, I'm super excited for you. Here's 111 things, at least, to consider before you start buying your house. So either get with the professional that's gonna lead you and explain to you. And again, we're not hitting up on you. We want you to have as much information as you need before you start your process of purchasing. And again, I'll provide a list of my buyer's presentation, what I'm going through with the buyer's presentation. And again, if we are meeting in the office, it's 1.5, 2 hours, sometimes more hours. And when somebody's telling me, I don't have that much time, I would say goodbye. I don't have that much time for you either. Because if you're not committing time to yourself, to your future house,
you can't commit your time
right
back.
Yeah, I can only imagine if you're going to be receiving those emails that you mentioned, how soon you're going to open them or reply to them or not. So buying a house is not just shopping, and it's much more than just having a down payment or having your list I want and wish. It's like totally much bigger picture than you can even imagine. So back to you. loan docs are drawn, came back, blah, blah, blah. We are at the closing table. Everybody's happy.
Hopefully.
Hopefully. For example, to me, the most rewarding part that I see happy faces. I want you to be happy. I want you to have as much information. I want you to find the perfect house, to help you find the perfect house.
We want you to love the house that you bought.
And we want to like us. Because we leading you towards your dream.
Exactly.
So what do you have to say, Ella? To the home buyers, like the top notes. Okay, I'm not saying the most important thing. Everything we said, it's very important. All of it, it's most important.
Honestly, the gist of it is summarized. Find the right agent lender team. Don't fall for theatrics. The lowest rate is not always the best deal for you. The lowest rate is not always the lowest cost. So vet the professionals that you're going to work with. Obviously, we want to work with you. Obviously, we would love to work with you. But at the end of the day, we know that we're not for everybody. Not everybody is for us. But talk to professionals, interview your professionals, and make sure it's a cohesive team between a lender and an agent and a lender. Because without that cohesiveness, you won't be successful.
That team. Maybe you didn't trust at the first appointment, but we were trying to build the trust in you. And if you already trust us, you have to have the winning team.
Yep.
To make your goal possible.
And that's what we want you to know, is that the winning team is the team that will have your back and protect you.
Correct.
But we also need you to help us to protect.
We need you to help us to help you.
Exactly.
I hope that this video was very informative. If you have any questions, ask us. You can ask me directly. You can write below. Don't forget to subscribe to my channel, where you're going to find much more information about the homes, housing in San Diego, different neighborhoods, and so on and so forth. I'm always here for you. Ella
pretty much lives on Zoom. But on a serious note, lending questions, bring them. If I can't answer them immediately, I will find the answers. And you want somebody like myself in your court when it comes to your finances, because it's not just about the interest rate again. It's about the team effort, and it's about what's best for you financially.
And I want to be a realtor for life. You know why? Because I treat my clients as a royalty, and you deserve to be a royalty. Boom! I'll see you in the next one.